Hi guys, it's me Nicolette, and today I want to talk a little bit about the tax-free account. I've been reading articles about how the tax-free account doesn't make sense. Why would people want to get in themselves invested in that kind of an account? Because we already have a tax exemption on interest income of up to 23,800 from SARS for any individual that's younger than the age of 65, and if you are over the age of 65, it is 34,000 rand. So people are basically saying, what's the point of you going into a tax-free account if you already have this tax exemption anyway? And it's not as if at any interest that you're going to get from any of the different banking institution or financial services institutions that is going to generate any interest in a year of more than 23,800. And I'm like, okay, I hear what they're saying, but here is my argument. And it's funny because when they write these articles, they also then say, the only way a tax-free account will work is if you make it a long-term investment account into a growth fund. And I'm like, well, duh. Because that's what we preach. That's what we speak about when we talk about investments. We always say investments are a long game. Investments need time for them to be able to mature and be able to give you the returns that you're realistically looking for. So why then do we even confuse the tax-free account with a short-term investment? Maybe perhaps it's because when it came about, the tax-free account, most people used to save it in a money market account. So basically the banking institutions, when they created their their tax-free accounts, they were investing the tax-free account into the money market. And perhaps that is the reason why people are saying it doesn't make sense, because at most you will get between 5 to 8%, and it doesn't really make sense for you to be using a tax-free account and tightening yourself to tax-free account, that tax-free account that has so many limitations. And let's speak about those limitations. So basically the tax-free account says that you can only save up to 33,000 rand every single year as an individual in this country. So you've got an allowance of up to 33,000 rand that you can save every single year. That's number one. Number two, in your lifetime, so in my ID number, each person in this country is allocated an ID number. My ID number as a natural person can only save up to 500,000 rand in my entire lifetime. Now 500,000 rand really at the capped minimum of 33, at the capped maximum of 33,000 rand means that it will take you 15 years for you to reach up to 500,000 rand. Okay, sharp. That makes sense. Everybody understands it. Those are the limitations. And the other limitation is that the moment you withdraw from your tax-free account, you put yourself at a risk of having less of that amount of money that you've withdrawn from your tax-free account in terms of your lifetime allowance, right? So for instance, let's say after 3 years, you decide, you know what, I need 60,000 rand. I'm going to withdraw 60,000 rand from my tax-free account. It means that you now only have 440,000 rand left as an allowance for your lifetime, because you've already used up that 60,000 rand. That's basically all that it says. It says that you may not withdraw from your tax-free account. And I think that's something that we need to get people understanding of, why in the first place the tax-free account was brought to light. It was brought to life to say, let's get South Africans into a savings culture, because currently South Africans don't save. So how do we help them without putting all the red tape around them so that they can get some sort of return and get excited about saving money? Let's then take away the tax issue and say, here is an amount of money that you are allowed to save in this country without you being taxed, without you paying capital gains tax on it or dividend tax. That's basically what it is. Now we know that there are certain instruments or certain asset classes in this country that you could never potentially save or invest into without you paying any type of capital gains tax, right? But again, there is a tax exemption of up to 23,800 for every single individual per year in your entire lifetime in South Africa. So what would make you want to go into the tax-free account? I personally think that it's very important that if you start attaching your tax-free account to a certain long-term goal, that's what is going to help you keep discipline, so that you do not hinder or hamper or interfere with the allowable or allowed limitations that you've got on the tax-free account, i.e. the 500,000 rand per lifetime limit that you've got. So if you decide, I spoke to Mapalo, who's from Women in Finance, and she was telling us that her tax-free account for her child is basically to be able to take her child to Disneyland one day, right? They've obviously got a time frame of when this child wants to go to Disneyland, but she also has helped her child understand that mommy doesn't currently have the money now, but in 15 years time we can go to Disneyland. We've got money that we can potentially be able to blow on Disneyland, and that's really what it is. Now obviously they've got a luxurious goal that is attached to it, but most people, their biggest goal is education, being able to take your kids to school the moment they hit tertiary level. Now we know in a normal lifetime of a kid, it takes 18 years for a child to be able to get to tertiary level, and tertiary education is flippin' hell expensive, right? Now not only just the tertiary education, but also giving your child a little bit of an advantage when they do reach their first year, buying them the first car, helping them buy their first property or first apartment, but also just giving them money to be able to start up their companies. So as a parent, it makes sense that the moment your child is born, you go out there and open a tax-free account for them in their name. The only disadvantage is that once you've used up their lifetime 500,000 rand, they can no longer ever start another tax-free account again. But there are other tax incentives, as we've already discussed, that there is a tax exemption of up to 23,800 rand for every individual. But now my thing is, people are saying, but the argument, Nicolette, is that I will never have any income generated from investments that is going to cap the 23,800 every single year. You might not have it right now, but over 15 years, you probably might be able to reach that cap. And I think that's the most important. Also, what is really important that people don't speak about is what type of tax-free account are you actually going into? It always makes sense to get a tax-free account that is backed up by some sort of asset management expertise. So a tax-free account that is primarily invested in the money market would not make sense. Number one, because we know that the money market can never yield any type of interest that is above 10%. 10% is even pushing it above 8%. So this means that you need to get a tax-free account that has got some sort of asset management expertise. And now there's a huge argument here about which type of asset classes this tax-free account should be having portions of. I always say one that has got equities definitely is a good go, and one that also has property equities is a good go, because those type of assets could potentially yield, interest above 10%, sometimes even as much as 13%. You just look at some of the funds that you already are investing in. I look at some of the ETFs. If you just look at most of the companies' top 40s, they yield out some really great interest interest percentages. So you could potentially get to a point where you are generating that 23,800 in even less than 10 years. So it's very important that we think about the tax-free account in a long-term manner, and we don't just think about it in a short-term manner. And the only way your tax-free account is really going to work for you is if you do not use it as an emergency account, because you're supposed to have an emergency account that is saving into the money market. And your tax-free account is supposed to be saving into asset classes that could potentially generate you the right type of interest. And I hope that this is kind of making sense to everybody. So basically what we're saying is that your tax-free account cannot be your emergency account. You cannot just withdraw from that account because it's supposed to be long-term. And long-term basically, for me, says fixed in my head. So the moment I think tax-free account, I think fixed type of investment. I think this is for my child. This is the legacy that I'm leaving for my child. And that for me is what's the most important thing about the tax-free account. There is one that I've partnered with TC van der Walt, who is a wealth manager, with the guys from Easy Equities, and I've put together a tax-free account that for me is speaking to the legacy that you leave as a parent for your child. It's a legacy that you, as friends of a pregnant woman, will start her off and say, friend, this is our baby shower gift to you and your child. We've saved you 2,750 for this month to start you off on this nice tax-free account for your child, so that you can potentially build something something and be able to leave something for your child. So for me, it really is important to give the tax-free account a little bit of time so that the magical, the magical ingredient of time and compound interest kind of kicks in. But also to remember that you've got that 500,000 Rand cap of a lifetime and 33,000 Rand of every single year. Remembering that anything that you put over and above that will be charged at the right taxable amount. So it's very important that you use the tax-free account correctly, and it is a long term, and it should be in equities, property equities, those kind of asset classes that can yield the right types of income.